Joe Biden's 2025 tax proposal explained. Joe Biden has proposed a really, really big tax proposal, like so many different changes, everything from 1031 exchanges being eliminated to cryptocurrencies to earned income credits. There's so much in here. I'm going to break it down and share with you the real, and not just give you my opinion, but give you the truth and what it really means. Let's go.
Noel. Yeah, she can fix that. If you gotta get it done, all you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
So let's get into it. I'm Noel Randall, real estate entrepreneur, multimillionaire, author, speaker, mentor, mom of 5, and so much more. But the important thing that you need to know is I started from bankruptcy, broke, bad credit, no money, just the worst situation ever, literally living in my parents' basement. But today I've been able to create a multimillionaire situation for myself, and this was all by investing in myself, learning new things, and that is why I'm here to teach you all of what I've learned to change my situation. So let's get into this tax proposal by Joe Biden. Now, we are not going to get into politics because I truly don't care who you vote for, but I really want to explain these tax proposals. Obviously, they have not been passed. These are different tax proposals that Joe Biden has put out there for 2025. And in fact, you can go to the White House's press release and see the entire thing spelled out and explained, or not necessarily explained, but spelled out. I'm going to explain some of the major changes that were outlined, and let's go through some of them that are really important. So as I've mentioned before, I'm a real estate multimillionaire. That is truly how I got myself out of my parents' basement and into millionaire status. So I am really big on real estate, and he has made some major changes and proposals for investors. And I'm going to talk about some individual changes, some business/corporate changes that he's proposed, but I'm going to start with the ones for investors because that is like so crazy to me. Some of these changes that he's proposed, many of them I don't even agree with, even though I think that he's a great guy and he still may get my vote. I don't think that these are kind of a little bit scary to me. So let's get into it. So the first thing that you need to know is about the change that he has proposed on the 1031 exchange. Okay, so there is code in the tax code that's called a 1031 exchange. And I'm going to quickly explain this because I have used this. My multimillionaire real estate investors use this. And this is an amazing way that you can avoid taxes when you are selling properties. So when you sell a property, the amount of money that you've made is considered capital gains. And right now, at the time of this video, capital gains are taxed at about 20% at the highest level. Okay, the highest level is about 20%. Well, the highest individual tax rates are around 37%. Joe Biden has actually proposed to increase that, and I'm going to talk about that in a second. He wants to increase them from 37 to 39.6. We'll talk about that in a second. But again, I need you to understand that capital gains, when you sell a stock or you sell an asset or you sell real estate, you are usually taxed at a lower level than income that you earn. That is called capital gains. So in order to avoid even the capital gains tax, even at the highest level of 20%, many real estate investors like myself and others, we will use what's called a 1031 exchange. And this is a major change in this proposal that I want to talk about because Joe Biden has proposed to eliminate it. Gone. Oh my gosh. This is crazy, but we'll see how this works out because maybe this won't be passed, but it may actually increase the amount of tax money that's received into the government, and it may help, and maybe I won't miss this. But let's talk about what it even means so you understand. So the first thing that you need to know, like I said, about a 1031 tax exchange is it is all about when you have one piece of property and you can actually get more property using a 1031 exchange based on the amount of profit and the amount of value that has gone up. So let's just say you have had a property. It's one of your investments. Maybe it's a small apartment building. Let's say this, using my graph, this is a 6-unit, okay? This is a 6-unit apartment building that you got and you paid $500,000 for it. You kept it for a couple of years. Usually we keep our properties for 2 to 5 years with what I teach in Noel Randall coaching. We teach that because there's so much benefits in keeping them 2 to 5 years. For a 1031 1031 exchange, you have to keep it for a year and a day. But if you were to just sell this after keeping it for 2 years, and now let's just say after 2 years, it has gone up in value and it is now worth 1.5 million. Okay. And this is really a very common thing when it comes to real estate investing. I teach all about this. If you want to learn more, go to noellerandall.com and sign up for my newsletter. So say now it went to 1.5 million. So you have $1 million worth of profit. Okay. Well, usually you would be taxed capital gains tax, and at the highest level, it would be 20%. Well, on $1 million, that is $200,000. That's quite a bit of taxes to pay. Well, with a 1031 exchange, instead of taking this, you would just do a 1031 exchange and you could just buy another investment property and you would not have to pay any taxes at all on these gains. Okay, so this would eliminate you paying. If you take this $1 million profit and you buy another, say now you can get a, what's this, using my picture, 3, 6, 9, 12, 15. So you trade in your 6 unit for a 15 unit. And let's just say now this property is, $3 million. Because now you can buy a lot more because you have these properties, and you take this $1 million worth of property, a profit, and you buy this property, okay, you wouldn't have to pay any taxes because this is like what's called a like-kind exchange. This is very popular in real estate investing because, again, you're not paying taxes on this money. You're able to roll your investment, your profits from your investment, your capital gains into another property and avoid taxes altogether. It is amazing. It is something that we do. And again, Joe Biden has proposed to eliminate this whole thing. Now, we'll see how that pans out, but this is one of his proposals. So let me explain some others so that you can understand all of the different proposals that have been made. Number 2, raise the highest income earners tax rate. As I mentioned before, currently the highest income earners on the tax bracket, and I'll put just a screenshot right here of what the current tax brackets are, you will notice that the highest amount for individuals or married couples is at 37%. Well, Joe Biden has proposed that we increase that amount on our highest earners to 39.6%. Now, again, this is on income, ordinary income that you earn, not capital gains. So this will actually get more tax revenue, and he proposes this so that we can have more funds to fund our schools, to fund, other government projects, et cetera, et cetera. This is his proposal. Again, I'm not going to give my opinion on it because that's not what this video is about. This is about you understanding what is going on and what's in this proposal. And again, this is to increase the amount of money that goes into the government so that they can fund other government projects like schools, education, defense, whatever, again, the government spends money on. So let me tell you the third thing, because it really ties into the thing, the tax, the percentage going up to 39.6. This one is huge. On your highest tax income earners, as I said, they will pay 37% currently. I'm not going to put the whole thing here. I already shared with you a screenshot. But currently, the numbers for individuals in the tax code and married couples are as follows. Individuals has a 37%. For individuals, it is $609,000 per year and up. For couples, it is $731.2K per year, okay? So these are really high income earners, okay? If you're a doctor, a lawyer, a dentist, something like that, you are currently taxed, at 37% at these rates, okay? As I mentioned in the one previously, he is wanting to increase these. He has proposed increasing this to 39.6%. Well, okay. That's not, to me, that huge. Is 2.6%. But let me tell you what the big change is. He's also proposed changing these numbers and lowering them. He wants to take this $609,000 and lower it to $400,000. And he wants to take this married couple. So again, a married couple, their joint income, take it from $731,200 per year. Again, that's a pretty big number. $731,200. He wants to change that to $450,000. and they will be then taxed at this rate. So these are what he's proposing. This one to me didn't necessarily seem like that aggressive of a change, going from 37% to 39.6, but going from taking the income from $609,000 a year to $400,000 per year is pretty significant. And taking a married couple, because again, it's two of them, from $731,200 per year down to $450,000 per year, that is major. That's what the proposal is. We will see how this goes. Just one point to note, again, this is income over these numbers. So again, $609,000 and up or $731,200 and up. He is saying income over $400,000 for an individual and income for $450,000 up above that for a married couple. So just to clarify, these are the minimum numbers here listed here. So it's income over those numbers. Number 4, the next major change that he has proposed is that he will be cracking down on non-payers. Joe Biden feels like there are too many high income earners that do not file taxes and have not been paying taxes. And he wants to allocate more money to the IRS, to those revenue agents, to go after that income and start cracking down on these high income earners. There is lots of money that is not being paid that is owed to the government. And Joe Biden is proposing that we start putting money to go get those people and go after that money. Again, yet to be seen if they will fund this and see, because to me that seems very reasonable. If you earn a lot of money, you should still pay your taxes. I pay mine. I expect others to pay theirs too. And this is some individual stuff that I think many people will enjoy. And I think this is what Joe Biden is trying to do to bring in more people to vote for him. He has proposed to increase the child care tax credit. Okay, so if you have a child, you already get a tax credit if you are a low income or moderate income earner. And obviously for each child that you have, you get an additional credit. So let's just say you get a credit of $4,000 per year for your children. And in many cases, it's like $9,000. There's some really good tax credit available to low and moderate income parents. And I think this is very reasonable. It's a tax credit. You have a child. I know for a fact as a mom of 5, really a mom of 7, you spend a lot of money on a child. So a child credit is very reasonable to get some of that money back. So what he has proposed, though, is not only a bigger increase in that credit, he has also proposed that maybe this tax credit will be given monthly. So say, for example, there was a $4,000, well, let's just use round numbers, $4,800. Let's say there was a $4,800 credit that you were due. Well, if you divided that by 12, that would be $400, and that's what you would get every single month. So instead of getting the full credit of $4,800 for a year, you would get $400 per month in that tax credit. And in many cases, if I'm reading it correctly, and again, feel free to comment below and tell me your opinions and your understanding, it appears that this will be given as like a monthly stipend is also what he is proposing. And to me, that seems very reasonable. Again, I think that was one that may bring in a lot of low income and moderate income parents to vote for Joe. So let's see. Earned income tax credit. Joe Biden has also proposed to increase the earned income credit. This is pretty normal. If you are a person that works and you earn about $64,000 or less, you will get this earned income credit. Again, Joe Biden has proposed to increase this credit. Again, I think most people fall into that income range. And so this is a very, type of proposal that will get a lot of moderate people to vote for Joe Biden. Let's see if that one goes through. Now let me tell you some major ones for corporations and businesses that I was really shocked by. Okay, so these are two major changes that I saw in the proposal that I wanted to explain that I thought were major for businesses and corporations. Most people don't like that corporations rarely pay taxes and that their tax rates are much lower. And, Warren Buffett pays a lower tax rate than his secretary because he's taxed on capital gains. And like I said, the max is 20%. But if you saw the little screenshot that I put in there, the max tax rate in many cases is 22% for most people, 27%. So again, a person making millions of dollars is taxed at a lower percentage than a worker that is earning money, paying a W-2 and paying taxes. They are actually paying a higher percentage. So this is going to probably inflame and upset a lot of people because this is him going right after corporations. So the first proposal is about the jets. So many corporations have jets and they are literally able to write off the expense of the jet. And This is called like corporate jet deduction, okay? There is a corporate jet deduction. So many corporations, their CEOs and their high-level staff and, these million-dollar earners are riding around in a jet, and literally all of the expenses for the jet or a great deal of the expenses of the jet are actually tax deductible. And that's why so many corporate people and corporations will buy a jet, and they actually are incentivized to buy a jet. Well, Joe Biden has said, no more deductions for that. You want to buy a jet? Cool, but I'm not going to give you an incentive on my taxes because you bought a jet. So we're going to see how that one works, because that one to me is very interesting. And I think the ultra uber rich, again, Noel Randall doesn't have a jet, so I don't really care. And I think this one's not so bad. And then the next one that I think people are going to be really interested in is that for a corporation is actually allowed to write off their employee expenses in many ways. Okay, so the money that they pay to you is actually a write-off, because there's labor costs and things like that. And that is why you big corporations, AT&T's and GE and Amazon, they have employees, and all of the salaries have a big tax deduction, because guess what? The employee will pay taxes through their W-2. So many times the corporation doesn't have to pay taxes on those salaries, because the salaried person themselves will pay their taxes to the federal government. So old Joe has proposed that salaries over $1 million will no longer be deductible by businesses. So literally these high paid, CEOs and SVPs and, these $5 million a year people that earn all this money, which in many cases at many corporations, quite frankly, are different friends, different family members. They're different people that, they put on the board, and they earn all this money, and the corporation is happy to pay them $5 million a year and $10 million a year, because that is a tax deductible thing for them. Well, no more. If you earn $5 million per year, old Joe has proposed that will no longer be a write-off for that corporation. It will be for salaries that are less than $1 million, essentially. So that's really big. I have explained all of these different changes, and I have something that I want to share with you. So I have a special gift that I want to share with you. Go to noelsbookoffer.com. You can get all 4 of my best-selling books absolutely free. You just cover the shipping. Go to noelsbookoffer.com right now so that you can get all 4 of my books shipped to you. We will ship them immediately, and you just cover the shipping. It is so inexpensive for you to become a leader. Leaders are readers, and you need to become a reader, reading some of the best books to help you earn more money, for you to get business credit, business funding, and start owning assets in real estate, so that maybe you now are earning more than $1 million per year, and maybe you will care about some of these things that he is proposing. Well, go ahead and get all 4 of these books absolutely free at noelsbookoffer.com. Again, that's Noel, Noelle with an S, book, BOOK, offer, OFFER, noelsbookoffer.com. Go there right now, because I want to make sure that you have all of the resources, all of the knowledge, and all of the tools that you need to be successful. This is Noel, to your success.